Well, let's get a perspective on what it spells for the broader market potentially as well. Anthony DePaul joining us from Atlantic Pacific Securities live there in the CBD studio. Warm welcome to you. Looking at that performance today on that one stock, and perhaps it's clearly not representative of the market writ large, but it does show ever more an intolerance for a number of things, not least of all not being kept up to date, it would seem, until very late in the piece. How do you understand the sudden news, right before profit reporting season?
Yeah, well, they do have to release market-sensitive information. Unfortunately, I haven't had the chance to do an analysis on it, so I'd have to get back to you. However, as we lead into the reporting season, there's going to be a lot of activity happening in the market, and any companies that have had a strong run leading into the reports really do need a strong report to justify their current price action. And what will be under the microscope is sectors like the materials sector, where companies in the iron ore space, coal and oil have done well as of late. So they really need to report strong to justify the prices.
Does it also show how fragile the run-up really is? It kind of, there's this illusory component to levels that have been reached by a number of companies, and the day of reckoning is very rapid when it does hit.
Correct, and about 50% of our market's made up by financials and materials, and we have a look at financials, especially the banks. It's with those companies, they really have been range traded over the last few months, and a lot of those banks, well, the big four banks, are closing in on the top of their recent trading range. So in order to break through, we need two things. We need the RBA to reduce interest rates in August, and we also need, when the banks do report, to show that their books haven't been impacted by the weaker property outlook. And with the materials sector, we've had a lot of production reports come out over the last couple of weeks. But what that means to the bottom line, we're soon going to find out in August.
Do you think it's too much to expect we will find out even then? Because look what we saw even this week across the Tasman, and look at the big four activity levels as they apply in New Zealand. When you have the Reserve Bank there, in its case, which is another way of saying our APRA, because they have oversight one and the same thing, right? When they come down with that imposition of a 40% deposit for investors, that's surely going to take heat out of the market and by definition impact the bottom line for the big four.
Correct, exactly, and APRA really need to work with the RBA to manage those risks. On one part, the RBA wants to reduce interest rates to increase disposable income and make the Australian dollar weaker, and therefore improve the inflation outlook and keep the GDP levels supported. But on the other hand, you've got APRA saying, if you read between the lines, we're concerned about the property market, and that's why they require the banks to raise capital in the first place over the last 12 months. And APRA will require them to raise more capital in the future, and also to tighten lending standards to make them more in line with their international standards. So the banks will find it very challenging over the next 12 months.
You suspect, though, realistically, investors should brace for some further guidance, at least from APRA, right, coming in December? That's the expectation. So we wouldn't be getting, if anything, a move on cap raisings this side of Christmas, or would we?
Yeah, well, when APRA came out with the standards in April last year, the market went from about 5,995 points, and very soon after dropped to 5,000 points, and the banks were aggressively sold off during that period, and that price action is still very much in the mind of a lot of investors across the market. And I would suspect on this occasion that they won't take a reactive approach. They might start de-risking some of their positions as we lead into that event.
And who, to your mind, would lead the charge? Is it sort of fair to say, with ANZ trailing in terms of price-wise its peers on a historic average basis, and for good reason? Obviously, the market weighing mechanism and its ops in Asia, ever more under question, and they've been reacting to that. Does that look like the obvious first cab off the rank?
Well, good question. What's difficult when predicting how much capital they may have to raise is that there has been capital raises that have, or decisions that have been dressed up as capital raises, and we saw that with ANZ where they reduced their dividend payout. And by withholding more cash in the business, that's almost like raising capital. So these things are going to be really important in assessing the likely impact that it will have in the next 6 months. With which bank has the most downside risk? Well, we know that the CBA is one of the biggest and has a very large following in the retail space, but they have also the largest wealth management arm, and we've had a lot of scrutiny on the banks as of late with some of their practices in that area. So if more scrutiny or more control is placed on that part of their business, that would be a concern for CBA moving forward.
Briefly, finally, if we go outside the banking sector, you got an expectation as to, given current performance and levels, what you should see as cementing that outperformance? What other sectors look like the natural candidates? So we're going back into health, for instance. Are we seeing that as a relatively robust outlook, or you're still uncertain about that?
Well, the healthcare sector has been able to benefit from a reallocation of capital away from the banking sector to the large cap health names because of the defensiveness in their earnings and their economic moat that some companies like Cochlear and CSL have. But they have run extremely hard, and there is a lot of debate in the market as to whether they are reaching a bit of frothiness and almost in bubble territory. So what we're looking at is companies outside of that space, perhaps the consumer discretionary sector, with a further decrease in interest rates that should increase the disposable income. And as long as consumer sentiment remains high with what's happening around the globe, then there's some companies in that area that might still do well, providing that their valuations haven't become too stretched with the strength that's seen in the market over the last few weeks.
So more Premier play on Premier, or say a JB Hi-Fi, either of those two?
Yeah, so JB Hi-Fi would have been helped by Dick Smith leaving the market, but companies that are growing their earnings, that have individual company drivers that are growing their earnings much larger than the industry, so Premier Investments, JB Hi-Fi has had a good run, but companies like, even in the consumer discretionary space, Tassal, providing salmon prices remain high internationally, they should benefit from that. We're looking for companies outside of the no-brainers.
Nice to talk.
Thank you.
That integration with Tassal and, of course, the acquisition that it did, what was it, last year? Will be one to see now how that's bearing free, right?
Yeah, the cost of the acquisition was an interesting one. They acquired it for about 50 million, and it was at only 5 times EBITDA. So you're going to naturally get, when you list that private company onto the market, you're going to get that natural PE uplift that's attracted to companies that are listed. In addition to that, you're going to have Tassal being able to supply their expertise and know-how to increase capacity and improve operational efficiencies. And it also increases their total addressable market from about 0.7 billion in salmon to about 4.3 billion across the Australian seafood industry. And as the market, the per capita consumption of salmon increases and the market looks for cleaner sources of protein, and the knowledge of the benefits of salmon continue to improve, and seafood in general, Tassal would be expected to be a natural beneficiary of that.
Good to talk. Enjoy it for your breakfast tomorrow. We'll talk soon.
Thank you.
For the Atlantic Pacific Securities.